Sage here for kalkinemedia. Thanks so much for joining us for our trending news topic to follow. And please subscribe to the channel and press the bell icon to be notified of the latest videos. So, what are the best commodity ETFs for 2021? In this report, we'll hopefully pique your interests. ETFs have increased significantly in popularity during the last 12 months, and to give you some perspective, Betashares Capital, one of Australia's largest ETF firms, has seen the expansion of funds under management increase from $10 billion in 2020 to more than $17 billion. Current as of April 2021. And ETFs can be a great way for new investors to get their foot in the door and gain a sense of what is involved with investing in shares. And via our YouTube channel, kalkinemedia, we have interviewed Peter Harper, the Executive Director from Betashares, and Gemma Weeks, the Business Development Officer from ETF Securities, and both interviews would be worth the look. In today's report, I will share with you 4 ETFs from the commodity market. After the recent COVID-19 economic downturn, most economies are in their recovery phase and heading towards a new normal, which will see a demand for commodities more than likely. However, the cost of these supplies could see a rise in price due to demand and inflation caused by macroeconomic trends and the recent stimulus efforts held by many governments in order to keep economies afloat during the recession. However, when speaking about investing in commodities such as energy, metals and other raw materials, as well as agricultural goods, the price of the same going up makes them more valuable. And ETFs can give the small-time trader exposure to these companies in diversified or specific baskets of stocks, either actively or passively traded by fund managers. And some of the biggest ETF fund managers in Australia include, but are not limited to, Betashares Capital, Vanguard, iShares, State Street Global Advisors and VanEck Investments. So let's begin by taking a look at the top commodity ETFs, and this is just a snapshot. It's important to do your own investigation into these funds and work out how the risk to reward ratio is aligned with your financial circumstances and goals. Invesco Optimum Yield Diversified Commodity Strategy, number K-1 ETF, ticker code PDBC. This ETF is highly popular due to its ability to address challenges associated with access and this asset class for exchange-traded funds. It offers diversity, being a commodity fund that gives investors access to more than a dozen of the most commonly traded materials on Earth. And PDBC has more than $5 billion in assets, and this actively managed fund so far in 2021 is up 30%. So why does it have the number K-1 in its name? It is advisory that PDBC doesn't provide for the heavy-laden K-1 tax form that is regularly issued by commodity firms and fund sponsors. And the diversification mentioned related to this fund does not lie solely and wholly in the types of commodities it invests in, such as corn, crude oil and copper, but it also swaps strategies it uses to trade in these commodities. Next on the list is iShare GSCI Commodity Dynamic Roll Strategy ETF, and the ticker code is COMT. This fund is another that uses diversification to maintain buoyancy. It also is known for its dynamic rolls strategy, which means short-term contracts are rolled into longer-term contracts. So although the fund doesn't actually own the fossil fuels or materials companies it invests in, when investing in the futures of the specified commodity companies, the price difference in the short term compared to the long-term contracts will then determine the profit or loss arrived at in the dynamic rolls strategy. And this usually is capable of minimising the costs associated with trading in futures. And being an actively managed fund, COMT will ensure maximum profit is gained when it rolls into the next contract without simply just clicking over to the next calendar month. And this ETF is up 25% this year, and the market share of this commodity fund is currently $700 million or thereabouts. Next to look out for is Invesco DB Base Metals Fund, on the ticker as DBB. Base metals are becoming increasingly popular, so having a fund that will allow investment into a basket of stocks related to these commodities could prove to be an opportunity worth investigating. And DBB has $400 million in funds backed by aluminium, zinc and copper. And the cycles relating to these commodities fluctuations correlate with global economic data in most cases, such as manufacturing and supply chain logistics. So DBB offers investors an introduction to raw materials. And who knows what the effects of inflation will do to these commodities as the economy recovers from the downturn. Demand will usually increase, which could make your investments more valuable. So this ETF has seen gains of approximately 21% in 2021 so far. And last for today's report is Teucrium Corn Fund, on the ticker as CORN. Because I know you will investigate on your own the commodity funds that focus on gold, oil and silver predominantly, how about I present to you a fund that is dedicated to agricultural commodity markets. It is comparatively smaller than the other commodity funds discussed earlier, having approximately $225 million held in assets. And CORN could be the new trader's introduction to direct exposure in agricultural commodities. Corn bears many uses aside from its most common as a foodstuff. It's used in the production of ethanol fuel. It also has many implied industrial uses in chemical form as a sweetener, starch and biofuels or plant-based plastics. And corn has seen an increase of 40% for 2021, that is CORN, and it could be due to its ability to extend its economic activity across a range of consumers, merchants as well as producers, and this makes corn, the commodity, unique in that way. However, we will have to wait to mention the costs associated with trading this fund. It is quite high, so I've left it for the end. 1.11% is what you can expect to pay, so that equates to $111 per every $10,000 invested. Thanks for your time watching, and if you like this information, please like, share and comment on the video below and subscribe to the YouTube channel. Press the bell icon to be notified of the latest videos, and for more information and regular updates, please head to the website kalkinemedia.com. Sage here for Kalkinemedia.